Welcome to TEC Talks, the first word in insurance, a podcast by Hyper Exponential. Hi, I'm Tom Chamberlain, VP of Customer Consulting at Hyper Exponential and your host, otherwise known as TEC. In this episode, we're talking to Claire McDonald, who's a member of the executive board at HDI Global. So let's get straight into it. To kick us off, Claire, we recently surveyed a number of leading insurance companies to understand their shift in priorities over the past 5 years and saw talent as being one of the biggest increases in priority. What do you think's sort of driven this more recent focus on talent for both hiring and retaining? And why do you think it perhaps wasn't such a big priority in the past?
Thanks, Tom, for the question. Yeah, I think there's a number of things that have changed over the last few years, and I think COVID's in the mix there as well. But I think if you look at most insurance companies, if you look at the age profile of most insurance companies, it has been gravitating towards a higher age bracket generally over the last few years. So we're seeing people retire, but our young people have now got, I think, so many more options, and some of which seem to be more attractive and exciting than insurance, let's face it. So I don't think we're necessarily getting the same people choosing insurance as an option. I think also, until recently, the apprenticeships, the graduate schemes, they all seem to die down. Stuff that was there in the 80s, 90s, early 2000s, I think post the economic recession, we saw some of those schemes go out the window. So we haven't seen the people coming through. And I think we've got quite a bit of a shortage of people in their 20s and 30s. Certainly those are the age groups that I'm seeing that are really going at a premium, where it might be like second or third jobbers, where, normally in the past there was probably quite a few, and there just isn't so much. So people are looking for people. The market conditions have been good over the last couple of years, particularly on the insurance company side of things. So companies have wanted to expand and to grow. The people have not been there for them to hire. There's a shortage. And then in addition to that, we've got many people who have decided to either go part-time or do different career choices post-COVID. It's caused some people to reevaluate what their working decisions look like. So I think it's a combination of all of those different things, really.
Yeah, that kind of makes sense. I wonder what would happen if we looked back a sort of bit further, times when sort of you and I were joining the industry. I definitely remember, as you said, those graduate schemes. In fact, I was kind of part of one at Norwich U.
Well, I was on an A-level training scheme, probably quite a bit before you. But that was what attracted me to the industry, was to join a job at 18 where there was a clear training program. And I felt, and progression was linked to, your exam qualifications, how well you performed on the job. And I felt I could see a structured career path that gave me, incremental salary as well. And that I would be invested in. It's that sense of investment, isn't it? And I think a lot of people are looking for that.
Right. Yeah, they spend the time training you. As you said, you get your incremental increases. I trained as an actuary, so there was actually quite a formal way through the sort of career path and quite clear sort of set boundaries. You pass this exam, you get a bit more money, you get to this level, et cetera, et cetera. And also as part of that scheme, you got pushed around different areas. So I worked in a bit of reserving, a bit of pricing and all over. And there was a lot of opportunity to do that. I mean, we both benefited from this, and it seems strange then that companies have decided that they're not going to continue to do it. Is it a budgetary thing, or is it?
I think, particularly in the UK, I think it's good, the apprenticeship levy. And what's that's meant, that has meant that we're now seeing the return of apprenticeships. But I think the other thing now, obviously, we've got to now compete, amongst other opportunities. And the internet shrinks everything, doesn't it? In the days I was applying for a job, I got it through the Careers Centre. There wasn't an internet and there wasn't a way of finding out. But now the internet shrinks things as well and makes so many other opportunities so much more easily visible that we're now competing, for that resource pool.
And is it that are other industries doing better at advertising these potentially more interesting looking, exciting kind of industries? The funny thing is, right, insurance is genuinely interesting. You and I are both here and have thoroughly enjoyed our times, but people don't necessarily see that until you're in it.
I think yes and no. I think if we talk about corporate insurance, specialty insurance, some of that sort of stuff, then yeah, it really is interesting. But we have to accept also there are parts of insurance that are probably quite not so interesting for a new graduate. And I'm talking, and I don't mean to dismiss any of these roles, because they are important roles, but the career opportunities perhaps within a call center, or something within, I don't know, life and health or personal lines, perhaps the bandwidth in terms of the career opportunity is not the same. But having said that, that's probably what most kids might think of when they think of insurance. Most kids don't think about insuring aeroplanes or oil refineries or satellites. They think about assets that are closer to home. And if they know somebody that perhaps works in insurance, maybe it's somebody working in those, and that doesn't seem so attractive. So I think banking and some of those areas have always appeared to be a bit more sexier. Frankly, I don't think they are. I think I think I think I think insurance is actually a lot more beneficial in terms of overall good to society and the spreading of risk, and enabling companies to do new things. But do I think that we really get that story out sometimes? No.
No, no, it's. I think you're right, and we can come on to sort of a few areas where we've seen that sort of promotion happening a bit. But I was just reminded actually of past colleague of both of ours, Carsten Scheffel, who very much loved his industry and was also asked that question, like, why insurance, and why do you find it so fascinating? He said, well, actually, you experience lots of different industries, and this is to your point. It's like for large corporate specialty type of stuff in particular, you do so because one day you're visiting a pipe manufacturer for massive oil rigs, and another day you're doing something on the aviation side. And genuinely, even when I was coming in, I trained as an actuary, but if I'd have known more about the underwriting side of things, particularly stuff like entertainment, I had no idea this line of business existed when I was joining. And even then, some of those roles were not immediately obvious. And I think you're right, unless you know someone in the industry and they can sort of bring you into it and show you what it's like, you have no idea. And that's actually something when we were both at Allianz, they did with a local school.
So the last couple of years, the association I'm involved with, IWIN, which is the Insurance Women's Inclusivity Network, which is part of the guild, the Insurance Guild. There's the Lord Mayor's Appeal every year, and it's about encouraging girls from diverse sort of socio-economic backgrounds to consider jobs in the city. So these are schools generally in London or around London, for whom we've got a lot of people on our doorstep and they don't think that the city is for them. So it's about breaking down that barrier. So, one of the things that the CI does, they have this fantastic game. So if anybody's watching this from a school, get in touch with George Tasunius at CII. You'll find him on LinkedIn. And he's got this game called Discover Risk, and we did it, as part of the We Can Be. We had a class of sort of 15-year-old schoolgirls come down from I think it was like up Hertfordshire way, and we ran this game with them, and it goes through like 5 different scenarios and tries to get them to think about risk. What's the risk in this? What could be insurable? What might not be insurable? And it's a really fun couple of hours, but it really just shows you where the risk can be in different things. But it has an entertainment scenario, for example, it has a movie scenario, has a chocolate company, has an oil company, but it just goes through different things. So I'd put a shout out to them if any schools are watching this and they want to do something about, getting their kids interested about the prospects of what insurance can offer.
I think that's a great idea, and I'll see if we can. I can use my wife's network as well to push this out a little bit to schools, because genuinely, you said it even in the city around London, these kids would not normally be coming into that square mile,
and we need
they don't. I couldn't agree more. We saw this with Lillian Bailey School, which we did, and we brought 20 to 30 kids into the office a couple of times and did something similar on what you were talking about, just explaining how insurance works, what it is. But we had people there from IT, from underwriting, from claims, from all these different areas. And the kids were, quite frankly, gobsmacked, go, well, they had no idea all of these different things existed within it.
Yeah.
And I know as a direct consequence of that, some kids have actually gone on to have some careers now in insurance, which
one
without
works for our old employer. So
yeah, absolutely. I think you were mentoring them as well, right?
Yeah.
But it's really great. And I actually put mine off. Unfortunately, my mentee went and became an accountant. That's how exciting insurance was.
For both of mine, and it's probably quite a few good years now. But yeah, still in touch with them.
That's really lovely. And but then again, it comes back to that thing. It's like, unless you know someone in insurance or have been introduced in this way, you wouldn't think to apply there. You would not tick it off your list of things to do, and wonder what more we can also be doing to promote it further, because it does seem like it's happening, but it is in pockets of places rather than as this kind of mass industry that we're really attracting all of these people.
Well, I think it's incumbent on us as people that probably got extensive networks to multiply events that we know about, networking opportunities, other things that are happening, and to try and get. I mean, I've got my son at uni, so this event next week, I said to my son, "Who's your placements director?" Because he's studying business, and part of that course is compulsory placements. I said, right. I said, who's your placements director? Because I'd like to email them with details of this event. So, I mean, we've, a range of us have probably got university-age children. Probably doesn't take much to get a contact for a placements director or a careers mentor that's at some of these universities, and start sharing some of this stuff with these people, that at least the students, when they're starting to look for a job, can say, oh, okay, well, I've heard about insurance, or I've heard about a particular facet in insurance, and that actually seems interesting to me. Because I think the more we share what's actually going on, and as you said, there's quite a lot of activity going on. I don't think networking has come back post COVID with a vengeance, right? And people want to connect, and people want to get together. And I think there's also a lot of young men and women that want to make up for those COVID years. That's good 2-3 years out of their lives that they've lived in a weird way, and they want to get back into it full heartedly. And I think as I said, there's lots of events and lots of things going on. So, look in Eventbrite, look in other sources, look in LinkedIn. But at our age, we can certainly act as multipliers and use our contacts within either education or university to get that message out there. Because I'd love to see more people, looking for these jobs. Because as I said, I think it's a fantastic career you can have in insurance. You can do lots of different things. We've both done quite a lot of different things, and it's not one job till you retire sort of concept. There's lots of different things you can do along the way, which I think makes for a rewarding working life.
Yeah, absolutely, and I think now with all the return to work stuff, this is probably more now on sort of retaining people once they're actually in. But there was a big resistance initially for everyone to be going back into the office, and people were quite happily working remote. But I've been chatting to quite a number of underwriters recently, and on the junior side, they value so much this being in the office, and sometimes as the sort of more senior members of the team, that's forgotten that you probably went through your career sitting next to people like you ask any senior underwriter in the industry, like, name some of the people who influence you, and they will talk about people who they sat next to and just sponged information off and built that network with them. And I think I'm glad to see we are. Well, I'm absolutely with hybrid working, but sometime in the office as well, to have those sort of connections and then take advantage of these networking things as well. It's really good to see that we're doing that.
Well, I think we owe it to the youngsters, don't we? We don't want to leave them at a disadvantage. And I think it's a question of paying it forward a little bit, really, isn't it? That there's no point knowing everything that you know if when you retire nobody else knows it. So I think a healthy combination of being in the office and being out of the office, or managing your day appropriately, that you can still invest time in other people. I think, yeah, it's really important the more senior you are.
And do you think we're doing enough? If we're getting slightly better now at starting to get some of the younger talent in, are we doing enough to retain them at that sort of early career stage? I've still seen some people who do a year or two and then pop off to go and do something else, which is obviously then a disaster. We've done the hard work getting them in, but are we doing enough to keep people interested? And
I think you can always do a bit more. I think it's understanding what is it that motivates that individual. Is it career progression? Is it, for some people it will be salary, but for most people it's a sense of forward momentum, and how are you delivering that? And is that you're finding other opportunities within your organisation to keep that person interested? I know for me, I would have definitely left. I mean, our previous employer, after 8 years, if they hadn't have said, well, actually, we don't want you to leave, why don't you think about doing this? And it wasn't something I'd necessarily thought about. So I think as an employer, we've got to understand what the individual's actually looking for. The individual may not be fully aware of what the range of opportunities might be, or what might be a best fit for their skill set. So mentor, talk to people, and try and match them up. I think being a manager is a matchmaking service often, because you have to try and find the right people in the right homes at the right time. And sometimes that may not be a job that they've ever thought about doing. I mean, I had a colleague once, and they thought that underwriting was the place for them. Actually, I explained, well, what is it you like about your current permanent change? I'm not sure you're going to get that from underwriting. So, actually, this person's now in distribution, and that's been a really good fit for them. So I think sometimes it's okay. What is it you like? What is it you're looking for? Okay, have you thought about this? Have you thought about that? And and a few years later, that person's still with the organisation. Another thing that my company's doing recently, which I really loved, is we've launched like this international young professionals network. So they're visiting different offices as a group. And there's probably like 20 to 30 in terms of age range. It might be first or second job. But again, it's about trying to encourage that networking within an organisation, encouraging that loyalty, that feeling of investment in them, and that we value them. And I think that all helps in terms of the retention levels.
yeah, I think you touched on it before, the investment side. It doesn't even cost too much to do things like this, and they love the fact that their employer has done that and taken the time to do it, and you will retain them for a lot longer. It's, as you said,
and they'll feel special, and they are special.
I'm so glad to hear that employers are doing more of that now. And I mean, even a past company, they were doing a fair amount of it, but I think there's still a lot, as you said, as well, placed on the manager, and a lot of responsibility, and making sure, as you said, you are matching them up and people are getting developed in the right way. And actually, development conversations are development conversations. I've definitely not had that all the way through my career, and there's been some points where development conversations happen once a year because you've got to feel like you're planned so that you can tick a box.
But
Now,
having said that, on the development side of things, I'm a firm believer you have to own your own development, right? It's not going to come on a silver plate and be handed to you that here's your next opportunity. You've got to work for it, you've got to earn it, and you've got to push for things.
yeah, you own your own development, but you're certainly enabled by your manager to go on that path. And as you said, I've had an interesting career as well. I've shifted from actuarial into more of a strategic role, and then out into underwriting, and got to experience all of these cool different things. But that was off the back of conversations with people who helped guide me and help understand where I could sort of add some value, and where I actually really enjoyed working. And I never dreamed as when I was sort of head of pricing whether I would actually go into underwriting, but that was an amazing experience, and something I wish I'd done sooner.
Well, I went from chief underwriting officer into head of operations. Not your most obvious move, So and that was chief underwriting officer for energy. But I think putting one freebie out there really for anybody in a manager, recognition that comes for free. That doesn't cost anything, and quite often is one of the things that people are looking for is some sort of recognition, some sort of degree of thank you or appreciation, or just being noticed. And that's at a low cost to an organisation. If people are leaving your organisation because they feel not seen or not visible or neglected, then you really haven't got too much of an excuse for that one.
Absolutely. We've got a really cool thing going on at our place where we have an HR system which is called Lattice, and you can give public feedback or private feedback if you like. And we're heavily encouraging everyone to give peer to peer, upwards, downwards feedback. And this pops up as a message, and you see it, and it's happening sort of throughout the day. It's like this person has just been given praise by this person. Like, oh, that's actually really nice, and it doesn't take long. And as you said,
Yeah.
it's that feeling noticed, and you don't need a kind of, oh, we'll take you out for a big extravaganza for, well, to celebrate you've done the fact that this. It's just, no, a pure thank you, and that was really great. You do smash this meeting and added a load of value, and that can again cost next to nothing to do. It makes a huge difference. So I'm all
And
for
let's
this
face
praise.
it, we might not think it, but not everybody wants to go for dinner or lunch with the boss.
That's probably true. Although we're probably the exceptions.
I hope so, but even still, I think some people might go, "Oh no."
I could get that, but yeah, just as I said, it's the simple things sometimes that can make that huge bit of difference, and people then want to stay and want to do more. I was also thinking the other day around technology and having access to the right tools, and again, this is part of your job satisfaction thing. And insurance sadly has been a bit of a laggard in technology adoption, particularly at the large corporate and specialty type of end. And I'm wondering what your kind of thoughts are on how much sort of technology and sort of been having access to the latest tools and equipment is going to help retain as well.
But for me, it's about augmenting. For me, it's about trying to be more efficient around the back end processing. So post bind, that sort of activity. The more we can digitalize that and make that sort of like a standard process, the better. For me, on the underwriting side of things, it's about how do we augment or supplement the brain power. Because from my perspective in the book, that my company writes, it is the big ticket stuff. And as good as computers are, they're still not quite matching up with the human brain, and how the human brain can take, maybe 20, 30 years of experience in this sector, things that they've seen. And because the computer can only look at what's happened in the past to a certain extent, and they're trying to use that as a predictor of the future. But I still want that human engagement in the mix there. So for me, if it can simplify some tasks, like, we've rolled out software in our organisation that enables policy wordings to be compared, a click of a button, and you can see what's different between last year's wording and this year's button. Great. Because I don't need every underwriter to read every single line and try and work out where the broker has moved clause A from that was previously on page 27 and is now on page 35. Yeah. And if the clause is the same, I don't need the human investment in that. So I think that's really nice when you can make things like that efficient. Equally, we're looking at how we look at risk engineering reports, and can we be smarter about that in terms of how do we pick up the differences or the highlights or the things that we want a person to actually look at versus letting a machine do it. So for me, I think it is quite exciting, the prospect of augmenting or supplementing the underwriting process. But certainly for the large ticket items, from my perspective, I want to keep the people involved.
I mean, absolutely. But underwriting in particular and insurance in general is a relationship driven industry, and you're not going to lose that, and that's absolutely here to stay, and so it should. As you said, technology should be here to supplement and augment and take away those admin type of tasks where actually you don't want a senior underwriter having to key from your pricing system to your policy admin system, or as you said, compare two slips when a computer can do just as good a job.
And also, to your point earlier, maybe younger people coming into the industry are also less tolerant of some of that stuff. Where it's
100%, 100%.
more admin based, because they've grown up in a world where Excel has always existed. Unlike, me with paper and pencil, and lucky if I got a scientific calculator. But they've not known anything else in their lives other than Excel. My son's been doing an Excel course as part of his uni course. He can do lots of things with Excel. I have no clue about what to do. You've probably got a better idea than me, because that's what you're getting involved with. You're getting a bit more involved in that side of things. But so these kids are coming out of uni or school with a very different skill set in terms of how to analyze and process data. And I think then organizations do need to sort of catch up a bit, because if they're effectively, going from 2020s and they're going back to like 2010 or 2005, they're going to feel that in much more way than perhaps other people would of a different generation.
Completely. I mean, my kids are completely digitally native, but my daughter still gets surprised when she like prods my computer monitor and goes, "Why is that not touchscreen?" It's like everything is touchscreen and easy and super slick and workflow. There's no way that generation is going to be digital in their personal lives and analog at work.
Yeah, and it's a question about tolerance, isn't it? It's a question about tolerance to live with that setup at work. So yeah, we've got some jobs to do, I think.
I think so, but it's moving in the right direction. And remember, these are also, this generation of kids are also going to be the future risk managers, and they're going to be the ones who are working with insurers. And again, if they're in a situation where they're not able to be digital and communicate in that sort of way and actually streamline workflows and policy admin and all the rest of that, they're just not going to stand for it. And I see companies who are sort of up and coming. Convex is an interesting example. They were tech first, and okay, they're a new startup, effectively 4 years old, I think now, and they went, "We're going to do this in a technological type of way. We're going to build out our tech stacks and do it as we really want to." And I saw an interesting presentation with was actually a panel debate with Stephen Catlin, and the other panel members were talking about actually the difficulty of attracting the right sort of talent for the work. And Stephen Catlin just sat there and went, "Yeah, we had no problems when they sat back down." And it's like, huh. And he's right. They were oversubscribed for a lot of their jobs, and the reason he gave sort of later was, well, we've got the technology that people want to be working on, so this works really nicely for us.
To that point, it's that yes, you can do that in a startup, but it's unrealistic also to suspect in many companies, that are 50, 100 years old, or even 20, 30 years old, that there isn't an element of legacy, and that we're all on this journey, but there's only so much you can spend on any given year to change up your legacy picture. And if you start off small and you're building your tech stack from a small base, but a lot of, we've seen an awful lot of mergers and acquisitions in the insurance industry. So most insurance companies are quite big. So therefore, you talk about changing the tech stack, and you've now got to change it in 20 countries as opposed to one. It's a different proposition, and it comes with a different digit price tag on it as well. So, and to how much are your customers prepared to take a price increase to cover that changeover? Probably not.
No, that is the difficult thing, and I guess insurers are trying to transform, but it will take a while, and perhaps in some areas might not be possible. I genuinely, one of the lines of business I used to work on, I think it had 7 different policy admin systems. That's for one subline of business. It's just absolutely insane sometimes, and that just can't that can't continue, because otherwise people are just not going to want to work on it. And I've seen these sort of utopian sort of states where actually, I was talking about the other day, there's a line of business with one of our clients who basically they get their information from the broker. It copies in an RPA, which unpacks the data, puts it straight into the pricing tool, and then a message gets sent to the underwriter. You can click on the link, go straight in, all the data's there, ready to go. And then there's live data at the back and peer reviews all done sort of internally. And it can be done, because I've seen it, but obviously it does take some effort to get there. But if you are not on that journey, I imagine that in a few years' time, when others have made that a little bit further, that will have an impact on retaining talent, because they're not going to want to sit there and still be double keying, triple keying, and will go to places where it's better.
Nobody wants to do something that's pointless.
Correct. Yeah, absolutely.
I think generally we all come to work to try and make a difference or do something that's actually meaningful. And if you feel that your job, if you're recording the same data 2 or 3 or 4 times, then you're probably querying, okay, to what extent am I making a difference here? Or could a robot not do this for me?
Absolutely.
To your point about the RPA scripting.
Yeah, absolutely. And given then all of this, there is still some repetitive work in there and stuff. And we are a hard working industry. Do you think we have, as an industry, a good work life balance compared to others, or hard to tell?
I think we do. I think there's a number of things here. I would say. I'd say insurance is pretty stable from a security perspective. That's a nice thing to have, right? And something that we probably took for granted before COVID. And I think we saw in COVID that pretty much the insurance sector was relatively unaffected. We all were able to work from home. Pay kept going as before. A good thing with insurance is, companies need insurance when they go through economic recession because they might want to buy more coverage because they can't afford the self-insured retentions. Equally, when we're in a boom that companies are expanding, they want to buy more insurance or new companies are setting up. So regardless of the economic cycle, we seem to be one of the industries that remains relatively stable. And I think job security comes into that work-life balance because if you're not worrying that the sector that you're in is going to become obsolete, or you're not worrying that the company that you're working for isn't sound, and I think there's good governance and good regulation generally within the insurance industry, then I think that's something that we take for granted that we don't worry about on a day-to-day basis, and that other people in a lot of other industries do have to worry about that. Hospitality sector as a case example. And then I think in terms of work-life balance, yeah, okay, there's going to be moments where you have to work late or you might have to do the extra hours. But generally, as a rule, it's pretty civilized in insurance. You can, I mean, I brought my son up, and I can honestly say I've not made it to any of the important things in his life that I needed to be at. And I think there's some industries you might not be able to say that. So it's not a drop at the hat. It's most things you can have some control over your diary. Most companies are offering flexible hybrid working post COVID. That's also another good thing in terms of making that work life balance, really work for you. So I think we've got a lot to be grateful for, actually, and I think it's one of the better ones.
Yeah, I couldn't agree more. I've really loved this and been able to enjoy life, and as you said, raise a family, balance all of these things. But yeah, working hard all the same, and making a difference in what we're doing. It's nice. I hadn't actually thought recently about the stability side. That definitely shouldn't be underestimated. It is very nice knowing that we are, I guess, like completely against the cycle of the sort of finance side. Insurance is going to be here because we're going to need insurance, and that's a nice comfort blanket, I guess, for what we're doing. Interesting. Just as before we wrap this up, a couple more things. If there's something in the industry that you could maybe something we've been talking about, it could just immediately change to make it all for the better, wave a magic wand. What if such a thing were possible? What would it be?
I would love to see a lot more women in senior leadership roles. It's 2023. The balance is a long way off. So from my side of things, sometimes you see more risk managers that are women. You see more women going into risk management, but you're still not seeing the change at the top of insurance companies. We are half of the population. I would also like to see, as part of that, better retention strategies, particularly for women going through various different stages of life, be that family, be that menopause, be that caring obligations. Because coming back to the question that we started off at the beginning of this conversation, the talent gap, we can't afford to lose 15% of women through menopause at that age. We can't afford to be losing the mums that go off to have children and then don't particularly want to come back or feel like they can't somehow balance that career with that domestic response, with their sort of caring obligations, if you want to put it that way, if it's not equal within their household. So I would love to see us, being really active around that sort of returners and understanding the sort of different dynamics of that gender profile, so that we could, keep the 50-50 that we have as generally as intake, and try and have that really come up through the ranks in a way that we haven't got at the moment. So I'd love to see that, because I think we've got a lot to bring to the table, And I've seen too much female talent get lost along the wayside in my 36 years in insurance.
Yeah, the inclusivity and making sure that's part of all the journey before people drop off. Yeah, I'm still genuinely shocked. We're in 2023 and still talking about this, and it's still an issue, and we still need to be pushing it. There's no excuses for companies anymore. It's out there. Everyone knows this should be done, and it's frustrating that it still is not in the right place.
And the frustrating one for me is, we couldn't find any women for this job. Do you know what? There are quite a few of us out there. So just look a little bit harder.
There you go.
So at least have shortlists, that have got some gender representation on them, or something. But at least look, that if you're presented with, I don't know, an all-male shortlist for a particular senior role, ask your recruiter to work a little bit harder.
Yeah, absolutely. Yeah. Again, no excuses. Cool. So the last thing then, I can ask the same question to everyone really. What do you think insurers, reinsurers, MGAs need to be doing now to prepare for a potentially inevitable softening of the market? What's the sort of top thing they should be thinking about and doing?
First of all, I like to try and tell myself it's not inevitable, because otherwise it gets too depressing. I would like to hope, though, being serious about softening, right? This particular market cycle, I don't think it does us any favours. This roller coaster that we all seem to go on, every few years. I don't think it does the client any favours. I don't think it does the insurance companies any favours. So I'd like to see that maybe the hills and the troughs weren't quite so steep each time, because the hill is a direct response to the trough that you're just coming out with, and then you sort of have to try and recover the money that you've lost, or money that you haven't quite delivered on in terms of shareholder value over that next period of time. So I'd love to see it even out a bit more. But I think from an underwriting perspective, an insurer perspective, certainly what we're talking about now, it's training, it's skills, it's have we really got our underwriters as equipped as best they can be? It's about data. So at what point are you in the market cycle? Do you really know? So are you not? Nobody wants to be in naive capacity. Nobody wants to. You don't want to be the first to start that ball rolling. So it's really about, do our underwriters really know where we are in the market cycle? Do they know? Have they got the tools and the information to hand that helps them navigate? Because I think I call it the shoulder seasons. It's almost like the top and the bottom of a market cycle are the easy places. Knowing when to maybe give a little bit, but don't encourage the avalanche on the way down. And equally, when is the point to turn to come up? These are the tricky bits to navigate, and this is where underwriters earn their money. Because at the end of the day, we all want a sustainable result, and we've all got demands from shareholders that don't change very much year on year, regardless of the market cycle. So I don't get, the shareholders want a lower dividend because you're going in a softening market. That's not what happens. They're expecting the same amount of dividend. So we have to try and, do really good risk selection, understand which accounts we're prepared to walk away from at which prices. And so that comes down to data, information, and training for me.
Yeah, and yeah, the skills and the training is crucial. Most of the underwriters won't have experienced a softening, a hard to a soft market. They'll have experienced a soft and then eventually hardening, but not the other way. And as you said, knowing where to give a little or not give a little, and trying to stop the avalanche. I think that's
and for which accounts, the risk selection part comes into it. Which accounts do we want to flex on, and which accounts do we actually say, sorry, but this is a no-go for us, and we're prepared to come away.
Very sensible, yeah.
Because there's no amount of premium compensates for a major loss.
Completely, yeah. That's absolutely right. Brilliant. Claire, thank you very much. This has been an absolute pleasure talking to you. And yeah, thank you very much for your time and your insights into the industry.
You're very welcome, Tom. Thank you.
Massive thanks to Claire for that. That was a brilliant conversation. So much valuable stuff to take away. Unfortunately, we'll be speaking to lots more brilliant people at the cutting edge of the industry throughout this series, so do stay tuned. And well, that concludes our first episode of Tech Talks. If you enjoyed today's show and want to find out more about the topics discussed, head over to hyperexponential.com to gain access to a range of resources relating to this episode. The link is in the description, and of course, wherever you're listening to the podcast, make sure you like, subscribe, and leave us a comment or review. Thanks so much for joining us, and we'll see you next time. Bye!